You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
And welcome to the option block. As you may notice, I am not Mark Longo. I am Mike Tussaw. Mark Longo is on assignment in sunny Florida.
On assignment, you mean he's vacationing on a roller coaster. But sure, on assignment.
Well, I think he said I was on assignment when I was just sitting on a beach in Hawaii last week, so I'm going to go with it. I'm going to take care of it. So nonetheless. But that other voice with which you hear is my partner in crime, my sidekick, the man, the myth, the legend, Mark Sebastian. Mr. Mark, how are you doing today?
I'm excited. I'm happy. I'm breaking out in Brexit and Remain excitement.
We get to say Brexit for at least another show.
I can barely contain myself.
Oh, it is very exciting. I agree.
Very. It's very good to talk about.
Yes, it is. So, without further ado, let's just get right to it. Brexit. What do you guys see and what do you think? Right now, it's it's 3 o'clock Chicago time right now as we're recording this on Thursday the 23rd. We'll have the results for the Brexit probably in about maybe 8-10 hours or so, for those of you that like to stay up late. But what are you guys seeing today, Mark? What are you seeing? What are you thinking?
It was in a 2-day period, we saw VIX explode higher and then completely give it right back, plus a little bit more. We saw the S&P rally that whole time. What did we give away yesterday? Like 6 points. We're up 27 today. Huge rally. Vol got smoked. VIX futures got smoked. The pound rallied against the dollar and the euro. VVIX down 16 today. So really, every little thing that you might look at that states, hey, I guess this vote's going to go the way we expect, that hit today. And, there's clearly more downside slack in VIX and probably a little more upside in the S&P. I think a lot more downside slack in VIX. But the way they're trading clearly points toward the market is putting its hat in the Remain camp.
The Remain, got it. With that being said, I'll ask you then the same thing you asked me before the show. What if they bail? What if we
will be down $60? We'll be down 3% on the open or more tomorrow. Could have a flash crash.
I hope for the sake of all of the bulls out there, I hope they stay.
Yeah, well, just because they have a Brexit doesn't mean that it's long-term bad. I would view, we'll be down 3%. We'll maybe make a run at 2,000 next week. But I'm not sure VIX goes up that much, maybe 20, 21, 22. And I think things settle down pretty quick.
Okay.
I don't think it's that huge of a deal. It's a trade agreement. It takes 5 years to unwind. And if anything, as I sit and think about it, this could be good for U.S. and Canada, right? If
they were to exit.
Yeah, if the Britons exit, it's not like they're just going to be out there on an island. I guess they will be out there on an island, but not not in the same sense. I could envision them maybe even joining NAFTA. I could see them certainly establishing at least a bunch of quick free trade agreements with the U.S. I think that could be very good for, we're either the fifth largest economy in the world and we're the largest, something like that, right?
Around there?
I mean, that would be, I think that would be, it would benefit the United States, is kind of my feeling. And that would, and it would probably benefit Canada, which is already kind of a they're quasi-British already. I mean, they're independent, but they have the Queen on their notes. I don't know if you knew that, Mike.
I did know that, actually.
So it's not like they're not going to be friendly with the Britons. So that could be. I don't think it's that big of a deal, and I would be looking to buy stocks by Tuesday.
No, I can see where you're coming from on that, because I think that the initial fear would definitely come in. Because what was the last time something like this happened? I think it was Greenland back in the 80s or something like that.
Yeah, what did they do? They broke up from Denmark or something?
Yeah, so I mean, with
Greenland's
that,
like 9 people.
Right, and so I mean, this is Britain's. There's a lot more there. There's a lot more people in London than there are in pretty much. I don't even know how to say it, but yeah, in one neighborhood in London, there's a lot more people in the entire country of Greenland. So. Right. I think I agree with you in that, with the fact that this is very unprecedented, it would cause a lot of fear. But if it's a buying opportunity, eventually the fear is going to go away. What
right.
Kind of concerned me earlier in the week, and we talked about it on the Monday show, is that when there was the poll that came out on Sunday night earlier this week, saying that, hey, it looks like the Britain's going to stay in. S&P futures rallied probably about 20 points on Sunday night. There was no follow-through on Monday.
No, no, there wasn't. And I think people were like, well, maybe we're getting a little ahead of ourselves. Today there was some follow-through. You know, we opened up 18 and rallied another 50% from there. So, you know, I think today was a lot stronger than what we saw on Monday.
Okay, now next question then. The Brexit passes. What do you see happening? Or not the Brexit, but
Remain.
Yeah, they remain.
Yeah.
What are you seeing happening with the VIX and with everything tomorrow?
I mean,
morning?
I think you'll see the VIX quickly get to 15, maybe lower, and you'll see a huge sell-off in the VIX futures. You'll also see the market make a run higher. Maybe there's another 15, 20 bucks in it, but you know, maybe we make a run at all-time highs, not tomorrow, but over the next week or so. And I think it gives us free and clear to rally all the way through all the way into the 4th of July, because I don't think we get non-farm payrolls until the 10th in July. Or let me see, do we get non-farm payrolls on the 1st or on the 8th?
I'd have to check on that, but
I'd bet you the 8th.
It wouldn't surprise me if it was the 8th either, just because of the weekend that comes after that.
Yeah,
so, yeah.
I mean, a lot of government offices a lot of people will cut out early on that first. I mean, the U.S. military is off on that Friday, the non-deployed. So that would make sense that, you know, maybe we're free and clear through the long weekend and we see vol fall all the way through to like the 5th or 6th. And then people worry about non-farm payrolls in July, and we start thinking September rate hike again. We start chatting about that.
I mean, it's been a whole 3 shows. We haven't had a discussion on rate hikes yet, or Yellen. So I mean, we got to do it, right? It's like
exactly. Since Janet Yellen started raising rates, the 10-year yield has dropped by 80 basis points.
Yeah, it's definitely been a drop for sure.
So I don't get what people are worried about with rate hikes. Who cares?
All right, next question. Elon Musk. He is trying to take money out of one pocket and put it back into the other, and move one company into another. And what are you making of this whole Tesla thing? Trying to declare themselves an energy company and want to investing in solar energy.
I mean, if you wanted an excuse to sell Tesla, this is it. I mean, this just shows how not interested in his shareholders Elon Musk is, and how interested he is in his own personal interest. How full of crap he is. This is a terrible deal for Tesla people. You've got a business entity in SolarCity that is going to go out of business without Tesla. And then you've got Tesla that may or may not go out of business and becomes much more of a cash burner with SolarCity than without. And this is basically, in my opinion, it's Elon Musk reading the letter on the wall, realizing, hey, SolarCity is going to lose its access to capital at some time soon, so I better have it get bought by Tesla, because Tesla has much deeper pockets and a much deeper business model and access to capital than SolarCity does. So that will make things a lot better for me.
So you don't think that people are going to really want to buy their solar panels at the same spot as they go to the Tesla dealer, like Elon Musk said?
Then they should do a JV. They should not buy it. That's a terrible. I mean, that is blatant, absolute blatant disregard for what's best for your shareholders in this purchase. It is terrible.
I mean, with Tesla dropping 10% yesterday on that news, I was just like, what?
I mean, it was a terrible, terrible deal. I think it's gonna get blocked. I think the shareholder pressure and all those things. He'd be better off. It'd be better for SolarCity and its chances to reject the merger tomorrow, and say, hey, we realized it was a bad idea, and that was it.
Yeah, because I mean, with that, it's kind of like trying to. I mean, like the all-time bad merger, the bad merger of all time that we always talk about is AOL Time Warner.
Right.
And this one's kind of right up there in that. Granted, people that may want a Tesla may also want solar panels, but
so create a JV. Have them JV or have them sign a marketing deal. You don't have
even then. I think it's kind of a bad idea because you don't go buy cars and solar panels in the same. I mean, I don't know. I don't own a Tesla, nor do I own solar panels. But
those type of people do because they like getting the tax credit. You've got some guy. He's buying a new house. He's buying a new car. He just became a .com millionaire because you need over $100,000 to buy a Tesla, right?
Right.
So those people. Hey, while you're doing this, why don't you get this tax saving on these solar panels? It makes tons of sense. That side I get. It's that it's still terrible for shareholders and it probably won't work. And so your really only option is I think for him to not do something like that. And you could set up a JV, but I think he endangers Tesla with this deal. I mean, I think Tesla becomes a far weaker company with way more difficulty accessing capital.
We disagree on the reason, but we agree it's a bad deal.
Exactly.
That's a good thing. All right. Anything else that's lighting up the tape today for the old trading block?
Not for me.
I mean, the only thing that I'm seeing lately is that we're really, at a point, GLD hit a kind of a double top earlier in the week, about a week ago, right around the 125 level, and I came right back down. Not that I'm a big technician by any means, and I always preface every time I say anything technical that I'm not a big technician, of course, but that is something with which they hit around the 125 level, and they've been coming down on that. I'm interested to see how gold would react if Britain remains. I don't think we're going to have a lot of movement out of gold one way or another. But if they exit, I think it could be pretty interesting to see what happens with it. So I saw that today. Of course, oil is up close to 2% on the day. XLE, my beloved buy and hold investment on the year, so to speak. That had a pretty good day today. It's up $1.12 above the 69 mark. So overall, there's a lot of optimism on the street today. And we'll see if it remains after 2 a.m. tonight. So with that, we are going to close out the trading block and shift on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the Odd Block, everybody. This is the part of the show. Well, you guys all know what the drill is. We've done this over 500 times. We know what the Odd Block is by all means. And if you don't know what it is, keep listening and prepare to be amazed, entertained, and just overall excited by all the unusual activity with which Mark, the man, the greasy meatball, the sea bass, is going to dazzle us with. Mark.
All right, we got some fun ones today. Let's start with RiteAid Corporation. That is where Mike's favorite place to buy all of his hemorrhoid cream, and it's one of my favorite stores to buy my Maxim magazines. So and along with they also sell drugs. So RiteAid's trading about $7.74. IV down huge today, huge, and we had a customer come in and do a big, huge close and what I thought was a close and roll. The customer sold 35,258 calls at 70.69 cents, and bought those at the 8 strike, and then sold the 9s at 3 and 4 cents. So my guess is he rolled down a long. Huge open interest on these things, paying 66 cents per spread, and it looks like it's a play on. This guy wants that exposure toward the WAG-RAD merger being approved. This thing go all the way out to January 2017. I forget when they're supposed to get a ruling, but I think it's ahead of this. And this customer was making a bet that it's going to go his way. Mike, you guys, anybody playing in RiteAid Corporation?
Not RiteAid, but it's interesting as to what's going on. Take Care clinics at Walgreens, as well as the Minute Clinic at CVS, and that's becoming a bigger thing. Mm-hmm. But it's becoming very popular. But here's what's happening. Recently in the Chicago area, Walgreens actually sold their the clinics themselves were never actually owned. They're never actually Walgreens. They were Take Care clinics which is a company that's owned by Walgreens Holding Company. And recently, Take Care Clinic was sold to the Advocate Hospital Network for all the Chicago area Take Care clinics. And that's becoming a bigger trend now in the clinic space. And I can see where they're coming from on it because of the fact that it's difficult for a drugstore to make money on basically a little mini doctor's office. Reason is that if you go to an emergency room, a lot of times the emergency room doctors aren't even employed by the hospital themselves. They're employed by some huge company that no one's ever heard of. The nurses, the techs, everyone else is employed by the hospital, but usually the doctors and the nurse practitioners and the physician's assistants, all the, as they put it in the business, providers, are usually employed by somebody besides the hospital. And the reason for that a lot of times is because of the fact that the law of large numbers. If a hospital, let's say they have 10 doctors in their emergency room, or 6 doctors, 2 NPs, and 2 PAs. Well, with that, they're looking to get malpractice insurance for 10 people. Whereas if they just farm it out to XYZ company that employs 50,000 doctors, nurse practitioners, and PAs nationwide, it can become a much more scalable thing in terms of providing insurance for the doctors, and whether it's malpractice insurance, their personal benefits, their bonuses, things like that. That's kind of what's happening. And so getting back to where my point on with Walgreens, what's becoming a trend in this business is that Walgreens, anyway, is they're selling their Take Care clinics, or this is becoming a trend with a lot of the drugstores. They're selling this to medical companies that can work it and scale it better. Whole purpose of those Take Care clinics was never to really make a huge amount of money at Walgreens. They want you to go in there so that while you're there seeing your nurse practitioner that you just need to see because you have the sniffles or whatever. Obviously, if you have a heart attack, you don't want to go in there because it's not the right place for it. But if you need to be seen because you have strep throat or something like that, it's a great place to go. While you're there, you're going to get your prescription filled at Walgreens, and you just happen to be out of your milk, so you need to buy a gallon of milk there as well, which they are going to price a lot higher than you would get at like a big grocery store. So that's right. The purpose of those clinics, and the trend is that that's happening. So long story short, I like what they're doing with it as a company, but we'll see how this works out as time goes by.
Yeah, I'm with you there. All right. Well, now I agree with you. Let's look at VGK. That is the Vanguard FTSE Europe ETF. So it's a European ETF. It's the FTSE. It's not the FTSE 100. I think it's a different FTSE index, but it's trading 49.71 up $1.09. And again, another big call roll. This was one where the customer clearly won. He sold the July 48 calls at 247 and bought the July 50 calls for 120. Basically, it sold a call spread, collecting $1.27.5. But he was closing the 48s and I think opening the 50s. And it looks like what he was doing was taking money off the table and then allowing his position to continue to make money if the VGK, the Vanguard FTSE 100 ETF keeps running up. This is not one I had looked at before. I'm very familiar with like EFA and EWE and some of those. Do you ever use this particular ETF, Mike?
With that one, sorry, I guess since Andrew's not on today, someone had to be the mute button dork.
Yeah.
But anyway, no, do not delve in that one. Don't quite have as much insight on as I do in the Walgreens Take Care
Clinic. No,
Clinic.
a ton on that one. No, I don't know much. I'm not too familiar with this one, but I've traded a lot of EFA and some of the other ones like that. This is very similar. It looks like kind of a European trade. EFA has a little more international, so maybe this is a much more European as opposed to EFA, which does have some world stuff. All right, now let's look at IILG. That's Interval Leisure Group, Inc. Not sure what they do, but it's a $15 stock. Massive seller of the 14 puts in December. This stock has an ADV of about 3,900. Well, they sold 24,000 of these 14 puts at 50 cents. So, yeah, definitely a serious put seller there. And apparently, guy does not think the stock is dropping much, $2 from its current level. And if it does, he apparently wants to buy 240,000 shares, or excuse me, 2.4 million shares. Seems pretty happy with that.
Apparently so, because yeah, that's with that kind of open interest on it. I'm guessing
open.
that one. Yeah, I was going to say, I'm guessing that's not one with which he's probably just closing out his long put.
No, he was selling. So those are the major odd block trades today. And now that we got that, let's go. It's Thursday, so shall we move on to mail?
I think we shall.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right. Welcome to the Mail Block, everybody. This is what we always have to say is our favorite section of the show because the mail comes from you, and without you, well, we have no show. But the reality of it is that my favorite part of the show. No, just kidding. This is a very fun part of the show.
It depends if the questions are good.
That's true, but for the most part, I would say we get 95% good questions.
You're right, we do. But when we get stupid questions, I get annoyed.
Yeah, well, you're not a very patient man.
I'm not.
No, you're really a horse's. Oh, never mind.
Oh, hey.
Anyway, I know. I'm sorry.
It's all right.
But nonetheless, all right. Now that Mark and I have done our counseling session, let's move on. First question comes from Robert. I would like to use a strategy regarding naked puts. If the naked put is far out of the money, what strategy could I use to protect myself? Could I use some type of order in case it was getting close to the naked put strike price?
All right, so may I?
You may.
All right, so if you sell up a naked put and it becomes far out of the money, here's what you should do. Mike, do you want to fill in the blank? All right.
Close it.
Thank you. You should close it. All right. That is your best strategy.
If it comes close to the strike price, though, if it's going against you.
What if it's going against you? There are a lot of different tactics. You could turn it into a ratio spread. You could roll it lower if you really don't want to own the stock. But if you're selling a put, you should be willing to take delivery. All right? And if you don't want to take delivery, sell put spreads instead of puts.
I would agree on that one. Just to add to that, if let's first off clarify the difference between a naked put and a cash secured put. A cash secured put is technically if you're selling the $10 strike price, you have all $10 in your account, and it's impossible for you to ever get a margin call. Naked put would mean that you're using leverage in some way to where, let's say that you would have, you're selling a $10 strike price on a stock, and you only have $3 or $4 in your account. That would be considered naked. So with that, I personally never want to sell naked puts ever. I mean, maybe if I'm leveraged like a few pennies or something like that just to make the order more neat or something, but for the most part, I never sell truly naked puts. But I agree with Mark. If it's starting to go against you and you're not prepared to take delivery on it, buy the extra put. Make it a put spread. Make it so that it's much better to lose all your money than lose your house, is the way that I look at it, in case it does go against you. In terms of like some things that you can do, it's having a short put go against you. It's not the worst thing in the world by any means. There's a lot of things that you can do to make it work in your favor. I talk about them a lot on not work in your favor, but kind of defend against the trade, whether it's just closing the position. There's nothing wrong with that. Whether it's, as Mark describes, doing a ratio spread, or I talk about them a lot in the strategy block and other sections of the show. But what I would seriously do, if you want to make this a very much a staple strategy with what you do, I'm willing to bet there's a company that rhymes with option hit that could really help you with something like that. Do you guys happen to have any classes on what to do if a short put goes against you?
We absolutely do. You can go to optionpit.com/store, I believe. But you can look on our store, and we'll have just about everything you can imagine. It'll make you really happy. And we got a great stuff for long-term hedging.
For sure. Now, for the second part of Robert's question, could I use some type of order in case it was getting too close to the naked put strike price? So, for example, let's say you sold the $10 put on a stock that's trading at $12. Is there an order that you could use, whether it's a contingency or a stop order or something like that? Do you have any thoughts on using orders at all, Mark?
Yeah, I mean, that's fine. But the only problem is you have to be sure that you're aware of you need to check those every day. And a lot of people forget to do that, and it costs them. So my preference is to have somebody else, make sure that you're checking that every day. And like I said, just close it. If it gets far enough away from you, you should be closing.
I would agree. Just to give you guys an idea of what I do, at times I do have to actually leave my desk. I don't like to. Normally I'm handcuffed to my desk. I never leave, and going to the bathroom is, well, we don't even need to get into the BBI today. But
yeah, you've got that lounge toilet, don't you, that you work with?
Yeah, I don't want to put that picture into our listeners' heads yet today. We'll wait till after the Brexit before we get into that one. But nonetheless, when I do leave my desk, if I have a short put on in some way, what I'll do, and I want to preface this, I only do it if it's a very, very, very liquid option, i.e. Apple, SPY, GLD, something to where you can get away with putting in a market order. Because if you try and do this on something that's not very liquid, you will get smoked. But if it's a penny-wide bid-ask spread on the option, typically, then I would do what I'm about to say. So if I know I'm going to leave I got to meet a client or something like that, and I have a put spread on, I'm going to be away for a half hour, 40 minutes or something like that. Doesn't happen very often. But if I ever do, what I do is I put on a contingent order saying, as soon as the market goes down to this level, get me out. And that's how I defend against it. Mm-hmm. There are ways with which you can have it like as an OCO. So let's say that you sold a put spread or a put for 50 cents, and you know that you want to get out of it if it's at 10 cents, but you also know you want to get out of it if the underlying goes down $1. You can set things like that up with an OCO. There's various platforms that do that. Pretty much, I guess almost any option trading platform does that these days. I don't know of anyone that really doesn't, but I like to set up just a contingency typically to keep things simple. That's how I typically do it. And then usually when I am meeting with my client that I'm away from my desk, I'm checking my phone every 12 seconds. So that's how I do it. So with that, anything to add on orders, Mr. Mark?
I do not.
All right. Next question from Tor. Hello, I am restarting my options trading on a shoestring. Any thoughts on mini options?
I don't think they exist anymore, really, unfortunately for you. So
I think they exist maybe with like a couple of the leaps that might exist for the contracts that they had to keep on or something.
Yeah, I think they're kind of a big stay away, my friend. So I wouldn't even bother. Sorry, bud.
Yeah. With that, I mean, if you do have it depends on how thin your shoestring is, but a lot of times if you have like only $300 or something like that, my opinion, instead of taking all the time to try and make the perfect trade every time and buying a call for 80 cents and trying to make it work, I've never met anyone with which that has worked, quite frankly, and I'm guessing Mark can probably say the same thing.
Yeah.
What I would do is just go work overtime or do something else to build up your account a little bit. At least a couple $1,000s, I think, would make sense at the low end to trade an account, and I think that you're better off going that route, because if you have to go the mini option route, even if they did exist, and even if they did have tight bid-ask spreads, which that's a no to both of those questions, the brokers were not interested in lowering their commission for the mini options.
No, they weren't.
They still wanted to charge you essentially 10 times the cost of what they should be. So those were three big strikes.
That was one of the big things that killed them, I thought.
I do too, because of the fact that if the brokers want in on that, they're charging 10 times the commission for it. The people that would be interested in that are people that do have smaller accounts, and then all of a sudden you're paying $10 for an option that's $30 in value. I mean, come on.
Yeah.
Anyhow, that is our thought on that, Tor, but I would recommend building up the account to a level to where you have a couple $1,000s at least.
Yeah. Shoestring trading doesn't usually work.
No, it does not. So, anyhow, next question from Cristoff. Do you guys only trade options? And this is a good question. This one you will not be annoyed by. I think this is a very good question. Do you guys only trade options, or do you trade futures too? How do you decide when to use which?
That's a good question. Russell Rhodes put out something on SIBO about, when to use futures, when to use options. I almost exclusively trade options. I've traded futures before. I am much more prone to options because really I concentrate a lot more on volatility than the actual directional pricing. I suppose if I was a directional trader, I would probably want to use futures, but I'm just not. And so, Mike, you're a much more directional guy. I might use them for hedging. That's the only time I'll ever use a future. But what about you? I know that you have clients that do, especially because RCM is also one of their partner firms is RCM Futures, and they're a huge futures industry broker, and that is one of your guys' core strengths.
For sure. And just before I get into ours, do you ever trade futures on the VIX? Do you ever do futures spreads? Maybe you'd be long the futures, long the VIX 2 months, 2 quarters out, and then short the one near term. Or do you guys ever do that?
Definitely, we definitely will do it with ETFs and with options. I do some stuff on my professional side with futures, but not as much within what we teach at Option Pin. Let's put it that way.
Okay, and that makes sense. Yeah, I mean, RCM, I'm not involved on the futures side anymore. I mean, I got a lot of buddies in the office that are, but I've had my series. I had my Series 3 for many years, but I always found myself just coming towards the options side of the business, just because it's love me for what I am, I guess. But I personally think that if I was not in the business and I was just trading for my own personal accounts, and I've gone through this in my head a lot. I always try and, whenever I talk to a client, I always say, okay, if I were in your shoes, this is what I would do if I were in your financial position. And I go through that with every client I have. And that's how I give them advice. So with that, with futures, what I always think of for myself or for my clients, I personally, as a retail trader and the manager of quite a few retail traders, what I like to use, I can get everything that I need out of an option. The only time that I would personally want to, either with my own personal money, to do a future is let's say that all of a sudden I really believed that corn, coffee, cocoa, sugar was really going to take off or really going to get killed. For whatever reason, I have reason to believe that. Now, I'm not in that world, so it's not something that I know or have any opinions on. But if, let's say, while I was doing research on trying to buy Starbucks, all of a sudden I found out some type of information that made me very bullish or very bearish on coffee, at that point I would consider doing it with some type of a stop loss if I was unfamiliar of the time frame. But that's the only time for me. If I wasn't, because of the fact that the way I manage money, it's all separately managed accounts with retail clients, but if all the money was pooled together, yeah, there would be times to where I would just use a futures contract to hedge in some way, shape, or form. But on the retail level, I'm more of an option guy. What I always believe is that there's very few things that a futures contract can accomplish that an option contract cannot. And that, yes, you have the time decay aspect of options, but if you are directional, I tend to lean more, and I'm more of a fan of just buying a deep in the money call or a deep in the money put, as opposed to going long or short a futures contract. So with that, I think they have their place, but they're kind of like, I wouldn't say that the futures traders are my brothers, so to speak, but I would say we're really friendly cousins. They have their place, just not my thing, so to speak.
There you have it.
Final question from our good friend 777. Are you aware? I'm going to put this one on you, Mark, because this one I do not know the answer to, but we will see if Mark has something on here. Are you aware of any specific gold arb between Chinese gold derivatives and their U.S. equivalent?
I mean, yes, I'm sure it exists. However, unless you work for a huge bank, you're not making money off of it, because you have to have access to capital in China. You need to be able to trade in Hong Kong. You need to basically have offices in the varying cities in order to execute something like that, because you're adding China into the mix. So my statement would be probably, but you can't trade it. Sorry.
Unless he's a big time banker.
He might be a big, huge time banker, and if that's the case, he might just be goading us to try and say, look, you got to be an awesome big-time hedge fund to do this. And then he can show this to a customer and be like, see, look, this 777 guy, little do we know that it's him, is asked a similar question, and Mark, that super smart option guy, said, yeah, there's an ARB there, but you have to work for an awesome fund or something like that. Well, guess what? I'm an awesome fund, and this is the ARB I do, so you should give me money. Maybe that's what his evil plot is the whole time.
You are such the conspiracy theorist. I admire you coming up with all of that in the few seconds with which you did.
Thank you.
That was very impressive.
But I think that's what 777 is really about.
I don't think that there would be anything. And the retail level, I really don't see it either. So with that concludes our mail block for today. And let's move on to Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And welcome to Around the Block. This is the section of the show where we talk about what we are looking at in the upcoming days, weeks, and months. So I just got to say it a few more last times. We won't get to say it ever again. Brexit, 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 Brexit.
Correct. Okay. You're going to love it. It's a carnation instant Brexit. You're going to love it in an instant, and then it'll go away. But I think it'll end up being Remain, and then the next thing is non-farm payrolls. Earnings season is a good month away. Not a lot. I think that we're going to be in kind of relax mode until then.
Yeah, and I just want. Then with the 4th of July coming up, we have our disagreements and things happen. But by gosh, America's the best country in the world, folks. Go out and celebrate. Enjoy. America is awesome.
America.
So with that, in this wonderful country of America, or for any of our overseas listeners, Mark, what do you got going on?
Well,
over there
Mike, the business show is officially available on iTunes now. You can find it. We're still a part of the Options Insider Radio Network, but we've got our own feed now. So go out and subscribe and listen to the business show. And if you like the show, leave us a review telling us how much we don't suck. And if we do suck, please don't leave us a review. You can just search the business show, and if you can't find it there, put the business show and then Options Insider Radio, and it will pop up right away. And then click that subscribe button and give us a great positive review.
Gotta love it for sure. And the thing that I always like to tell people at this point in time that are interested in anything with which we have going on at RCM, if you are interested in having someone manage your money and you're not necessarily a multi-gazillionaire like Sebastian, I'll help people. I'm more than happy to work with people. If you only have about a couple $100 a month to invest, feel free to contact me in any way you'd like. I can be reached at 312-212-3531 or send me an email at mtusaw@rcmfs.com. And with that, that concludes today's episode of The Option Block. As always, we'd like to thank our co-host, Mark Sebastian, and we'd like to thank Mark Longo. After all, it is his show. If you'd like to see a lot of great other shows on the network, you can also you can also go to theoptionsinsider.com, or you can do what I like to do. I actually have the Options Insider Radio app. If you're interested in watching and listening to the business show, I see it's on there right now.
Mm-hmm.
Check that out. It's a great app, folks. I really like it. That's how I like to listen to all the shows when I'm at family parties, and I like to tell my family, hey, look, I really do have a job. That's how I do it, and I'd recommend that you do the same. So,
great idea.
With that, I'd always like to just give a very warm thanks, and we will see you next week. Have a great day, everybody.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.